Hi guys, welcome back to our weekly forecast. We'll start with the DXY dollar index, as we can see right here. So the dollar index did bounce back down from the 93.74, approaching the 91.81, which is the support level right here. The trick right here, you cannot sell right here. This is too late to sell. What we do expect, either it will bounce from here or it will make a double bottom, something like this, then bounce back up, most likely. The trick here is you can see this support level has been supported by the MACD down here, and if we put a horizontal line right here, so we can say the same level at the MACD also is still, it can dip a little bit more, okay? But after this is kind of oversold or so, okay? So you will not be selling here. You would either take your profit, or you would start thinking about a buy with a reverse pattern. So what happened right here, this is one time and almost 2, 3 and 4 times, so it's like a double bottom. What you can see here, this did go up in an ABCD style. So it AB, then it did have like a 50% correction to the downside, then it did go back up to complete ABCD, okay? But when it was falling, it didn't do the same scenario. It's almost continuously falling, also below the moving average and everything right here, okay? So in the way up, we can get the same scenario: one wave up right here, then one wave down, okay, then one wave up. The next here we do have the gold. So basically you can see the gold is having this very strong level at 1830 at one time, 2 times, 3 times and 4 times. And the Feds also are gonna start doing like tapering soon, within 2 months or so. Basically tapering, guys, is when they're buying bonds and stuff and they're going up. Right now they're buying $120 billion per month. So this is rate, okay, and going really fast. Once they start reducing this rate, still buying but with a less rate, so that instead of going really fast uphill, it's gonna be kind of slower. Okay, so let's say they drop from 120 to 80 billion per month, and that's probably something like this is going to happen soon. So this is called tapering. Okay, so basically tapering, they're gonna reduce the amount. Once to reach the flat level, which they keep dropping all the way to reach zero, no longer buying anything, okay? Then later on they start selling what they have, and that's called tighten, okay? So they will tighten, so they sell what they have already. So basically the curve has to look something like this. So they will be going up really fast, then start slowing down, then come to an area where they are flat, okay? Then after this they will drop. So when they come here, all this is very bullish for the indices, okay? So the indices are gonna be, and the stock market is gonna be on fire. Why? Because it's really easy to get money. The money supply is so crazy, available for everyone. But once start reducing the amount, then the money supply will kind of decrease, okay? So they trying to fight inflation. If they keep pushing money to the economy, then just the inflation is gonna skyrocket, okay? It's gonna go really up, high inflation. And they don't want the inflation to be really high. They need to keep the inflation around 2%. So the inflation now about 3% or so. So they're not happy with this, but they're saying this is just a short term kind of, and they're gonna bring it back down to 2%, okay? So, but once they start dropping this down, what's gonna happen if they decrease the amount of money supply? Basically, there's no much money available as before, so the companies are no longer gonna do expanding, are not gonna hire new people and all that stuff. So the unemployment rate, okay, or the employment rate is gonna kind of go down, okay, or the unemployment rate is gonna increase. So inflation and employment rate, those are the two things the Feds are trying to play with. They want price stability and the highest, the maximum possible employment rate, okay. Okay, guys. So how is this gonna benefit? Is once they start kind of decreasing, okay, or tapering, then going flat, then start kind of tighten, okay, in their monetary policy, and that's gonna make the bond market kind of go down and the yield market go up, and that's possibly gonna make the gold go down, okay. So basically we can see this has a negative effect on the gold. It's gonna drop the gold down, it's gonna send the dollar index up, okay. Once the DXY will go up, we can see also the gold is coming down. So the gold is gonna move according to the US 10Y, which is the yields in the bonds of the 10 years in the United States, and also DXY, which is a dollar, okay. So basically we can see the dollar actually coming down. So these are the levels we can watch: 1820, 1800, 1770, and then 1720, which is the previous support right here, okay, guys. The next we have right here is the US oil, and for our time frame we can see the US oil was, it did go down in ABCD, then it did rise up ABCD, it did rise up. What we expect was this C rejection here, right here, it did make like a double top. I do expect the oil to come down here to 63, then later on 59. Okay, the oil need to trade between 50 and 60 very soon. Why? Because higher prices are gonna, higher oil prices or higher energy prices are gonna send inflation to the higher level, and the governments, they don't want that. The central banks, they don't want that. They want to bring inflation down. To bring inflation down, they need also to bring oil prices down, okay, to support the economy. And the OPEC are kind of helping out with this one. They're going along with the central banks. So basically the producers, especially in the Gulf countries, they need to trade the oil above $40 per barrel to be profitable, also in the United States. Okay, and consumption, basically they want, and very soon, to support the inflation, to keep the oil below 60. So basically this is the range the oil should be trading in, 40 to 60. Okay, not actually 70. 70 is not gonna support it, so it's gonna come down very soon, in my opinion, and we're gonna get a sell-off really fast in the oil. So that will make it a really good opportunity. Okay, guys. The next here is the DAX. So the DAX did reach 16,000, and if you guys have been following since March and April, and we said we do expect the DAX to reach 16,000, and that's from like 4 or 5 months ago. Okay, guys. So basically this is making like double top right here. We can start seeing the DAX is coming down. Okay, basically if the DAX will come down 10%, which is very normal in the indices, so basically we're talking about 1,600 points to the downside this year. So possibly we can get the 13,400. Okay, this level, very soon. Okay, guys. Here the Dow Jones is the same thing. We also have been saying the Dow Jones to up to 36,000, and the point from this is, before the coronavirus time, we are very close to 30k. Okay, but it didn't break it. It was below a little bit, 29,700 or so. So at the coronavirus time, COVID-19, it did bring it down to almost 18,800 or so at this level, kind of. Okay, then the Feds got in, and the central banks and everything, and the price did shoot up to come back to the 30k. Then after that, this price, it didn't have the 10% for the previous year, so it did go another 10%, which is 10% is gonna make it 3,000, then another 3,000 for that year. Okay, so it did make 30k, 36k, and that's what we expecting from like April or May. So we're right there. So what's next? What's next? I don't think the Dow is gonna keep shooting to the upside. Okay, especially we talked about the Feds. They're now going like this, and very soon they need to go like this. This is not gonna support the Dow to continue to the upside. Okay, so right now this trend we are seeing in the Dow is no longer gonna be like this. Probably it's gonna expand to the upside and downside, and we're gonna start seeing corrections down, for a little bit of time before we continue the bull run. Okay, so basically we can see a 10% correction in the Dow. So if we get a 10% correction, this means we're gonna go 3,000 points to the downside from 36k. Then this is gonna come down to 33k, and that's very, very normal and accepted to get 10% down. Okay, so basically we can see the 33k, 3,000 points correction within this year. Okay, guys. So basically, however, for short-term trades, this we can see these levels, slowly one by one, all the way down to 33,700. Okay, euro dollar, as we know, the dollar index is going against the euro dollar, because euro dollar is weighting 58% in the basket of the dollar index. So basically you can see it was going down, then it did have an ABCD, then it did have a correction to the upside. From this level, possibly we're gonna get a wave down, ABCD down to this level, and go even further down. The euro dollar, I think you need to go down back to 1.15 within 2 months or so, guys. Okay, the pound dollar is going in the downward channel, as you can see right here. So that's okay, right here, like this. So basically this is the top of the channel. I wouldn't buy here, so we're waiting for a sell signal right here. So it was a nice reverse, so possibly we can get to test this level right here, and further down is also possible if the dollar index is gonna get really strong. But for the meantime, we're looking for this level to come down here. Okay, it's always good to sell with price action. So once you see like a double top or something like this, or you go one high to make another one, you get a lower high, start to break in this previous low right here, this will be a good area to sell right there. Pound Japanese yen is very correlated to the pound dollar, and we also, you can see multiple time 1 2 3 4 5 6 times right here it did bounce from this descending channel, and we can expect this to continue going down here. This will be the first target, and that's the second target. So basically we're probably gonna see the 148 very soon. Euro Japanese yen is the same scenario. This is descending channel. We can see it did go up a little bit last week, but at the end of the week it started dropping. We can see this going all the way here to 129, then after this 127. So we're gonna see the euro yen dropping, and I can see that. Okay guys, that was the last chart we have today. Thank you guys. If you have any comment, please leave it in the comment section. Also, if you want to compare brokerage and open a live or demo account, we're gonna leave the link down below. You can check it out. Thank you. Have a great day.